Get started here. So first off, let me talk about the rules behind everything. So first off, you guys want to be in a quiet location. You guys want to not have any distractions around you. Make sure you have a notebook. Make sure that you're fully focused and that you attend every single day. What I've noticed with the past 7-day trainings is that in this first 7-day training, like right now, we have like about 50 that are live and people are like in and out. But towards like the second day, third day, fourth day, like people just stop and they're not as committed like the first day of just showing up every single day. So the first part of seeing success is first showing up. Like you have to show up. If you're not showing up, then how are you going to be learning, right? So you can watch the recordings, which by the way, that's another thing. You can watch the recordings if you can't make it for any reason, but strongly suggested that you guys show up to each of these so you can ask questions. Which brings me to my next thing is ask questions, okay? Don't ask questions like while I'm in the lecture part, but there's like after I go through a certain section, then you can ask questions, okay? So what I would recommend is write it down on a piece of paper, write down your question, and then let me know. That's what I'm here for. I'm here to interact with you guys. We're gonna be doing this a bit different now. So another thing, after each of these days, there is homework. So we're gonna kind of see this as like a classroom, but the reason for having homework is so you guys can actually mark up the charts and not just hear me and see me. But when you're actually doing it, that's when it starts sticking into your brain. Something else that I'd suggest to best stick all this knowledge into your brain is teach someone else. Right when you learn something, teach it. And that's the fastest way. If you see like the best way to learn, the fastest way is going to be teaching someone else. So even with me, when I teach people inside of this academy, like I'm getting better and better as a trader because I'm doing my own trades. I learn new things that I see and then I teach it. So then it sticks to me. And then it's just like, for me, it's pretty much programmed inside of my brain where I look at a chart and I know when to get in, when to get out, set, take profit, stop loss, all that stuff. So let's get a feel for how many people are brand new that don't know anything. Put a 1 in the chat box real quick. Brand new, don't know anything about Forex. Literally like, don't even know candlesticks, like support and resistance, indicators. And be honest. It's not bad if you put a 1. Okay, so pretty much, I think everyone knows. Gonna wait a couple more seconds. All right, I think pretty much everyone knows. All right, so we're still gonna be covering the basics, just for like the purpose of when we do have like people in the future that watch the recording, if they didn't know anything, they're gonna watch that, and it's still good to know these new things. Something that I'd suggest is whatever you learned in the past, try to put that aside. Don't really stick that on. Stick to what I'm teaching you right now. Don't bring on like extra indicators that you've learned from like IML or like extra things. There's a reason why you're not successful in those different things, different companies and indicators that you've tried, is because you're using that, and that's probably what's throwing you off as a trader. So the main thing is just for these 7 days, erase everything, learn something new, try it out for yourself, and then see how it works for you. But most likely it's going to work. What you're doing is really copying someone that's successful. Recently on Instagram, I actually posted about the best way to see results is by copying someone else who's successful. You just have to duplicate exactly what they're doing. I reference my my bodybuilder, 11 times Miss Olympia, and she's like super buff for a freaking girl. It's crazy. But I just learn exactly what they're doing, and most likely I'm going to start seeing success. in that area. So, all right. So you guys put a 2 in the chat box if you guys can see the risk disclosure. All right. Awesome. So I would suggest reading through this. I'm not going to read it out loud, but pretty much with trading, there's risk involved. I'm pretty sure you guys all know that. That's why I named myself Risky Ricky. Obviously, I've lost some money, but I've made a lot of money with trading, and there's risk involved. The thing with being risky is you want to make sure that you have smart risk, not dumb risk. Okay. When you're just doing it like gambling, you're just kind of closing your eyes and saying, okay, maybe I might win. There's a 50-50 chance. The whole point is not getting a 50-50 chance. Us as traders, we're not really gamblers, even though if trading is considered gambling. What we're doing is we're predicting the market in areas and having high probability wins. Okay. We pretty much, it's like counting cards in, like, let's say poker or something like that. Like you're counting cards, you have more of an advantage than the people that don't know how to do that. So we're going to rig the system. We're going to make some money. All right. So let's go on to, first off, I want to get into the whole mindset part of trading. I know some of you guys have already seen me present this. This part is really very important because this is pretty much what you guys are going to be doing, is getting into the investing side. Let me actually bring up my annotation tool. Give me one sec. Okay. And by the way, if you guys might be wondering why I wear these glasses, they're not prescribed glasses. These are blue light glasses, which is actually something that I recommend for you guys to get, is blue light blockers. When you're looking at your screens, it can kind of affect your eyes. So this would make me not like teary-eyed. I'm just focused. Probably said they're the best. Yep. Okay, I can't find the annotation tool. Not sure. Here. All right, so let's just get into this right here. Oh, we have a pointer here. Okay, so left side, we have employee. Employees, what they're doing is they're trading time for money, right? This is 5% of the world's wealth. 95% of the population is on this left side, which another area is the self-employed, owning their own job, which is also trading time for money. All right, now, this is where some people might be getting it wrong, is being on this side isn't completely bad, because I started off this way as an employee, and then I got into self-employed, and then I started getting more into business owner and investor side. So right now, being an investor, what I'm doing is I'm trading money to make more money. And then being a business owner, you have people to help you make money. You have a system in place. Okay, I like bringing up the McDonald's idea. Like Ray Kroc, he's the owner of McDonald's. He's not flipping burgers. He hires people at like $10 an hour to flip burgers for him. But he's the one making most of the money. So if you see on the right side, 95% of the world's wealth is on this side, but it's 5% of the population. So it's not very many people that are on this right side. But once you start knowing about this is where awareness starts coming in. And then this is how you start focusing on becoming investor and business owner. Now, you don't have to completely get rid of self-employed or even a job, okay? My reason behind quitting my job back, 3.5, 4 years ago was I hated my job. It was a dirty job. I had to deal with like the back of restaurant, like cockroaches. I was a dishwasher repairman. So yeah, I had skills that made me money, which pretty much in all of these, you need skills. But I was working my ass off, not making that much. Well, during the time, I guess it was kind of considered a good amount. I was making like around 3,000, but I was working from like 7 a.m. to 7 p.m. but working my ass off in the heat, and it was just horrible. Another thing that helped me out was I hated my job. Not my job, my boss. So that's what made me want to quit. And then I started getting into entrepreneur books, into different ways of producing cash flow. Then I got into MLM, multi-level marketing. So some people, there's like IML and like all these things. It's good, but it's not good at the same time, because what you're doing is all you're doing is recruiting people to sign up under you, and you get a commission, and then you get someone else, and three gets three, and it's just a whole pyramid scheme type thing. Yes, it can make you money, but you're still trading your time for money. And I didn't like having to sell people. I didn't like having to really like work hard for it. I would rather do it where it's pretty simple. Once I learn the skills, I don't have to sell anyone. I just put my money in the market, make money. If I wanted to, I don't have to have MMA. I don't have to have all other business. I could just rely off of investing and be fine. But something else that I promote is having MSI, multiple streams of income. Okay. Multiple streams of income will allow you to make money as a business owner, make money as an investor. You can make money as self-employed. So you can even be an employee, but as you're just having different sources that are coming in. So if one doesn't do well, then you have other sources that are coming in that are bringing you money. And that's the whole point, is you want to have more streams. Now, as far as financial freedom and time freedom, this side, not so much time freedom, okay? Because you have to be there in order to make money. Compared to the right side, you don't see anywhere on the right side having to do with a clock. So it's not really time. Yeah, it takes time to create the business and develop and everything, but most of it is investing into your people, or investing into, putting money into something that will make you more money. So this is a whole mindset shift that people need to start, getting out of, is more that employee self-employed mindset and flipping over. Okay. So next thing, what is Forex? So Forex is short for foreign exchange. I don't know if you guys saw my Instagram username. I got @Forex. You guys aren't following me, go ahead and follow me on there. But the Forex market is the most liquid market in the world. It exchanges about $5.3 trillion per day, compared to the other markets such as the New York Stock Exchange that exchanges approximately 200 billion per day. All right, so 5.3 compared to 200 billion. Yeah, there's a lot of stock traders, but Forex is really the way to go. That's where you make the most money. All right, you can make a lot of money with stocks. The thing with stocks is you need a good amount of money to invest into it to make a good amount of money. Forex, you can do 100% return in like a day or a week. Someone had just recently said that they made like 100% off the signals in like a week that I do. So that's like kind of unheard of inside of the stock market. But in Forex, it's possible because there's more volatility. So next thing, and just so you guys know, right now I'm going through a slide, but pretty soon we're not going to be going through slides. We're just going to go through the exact things, all the resources that you need, all that stuff. So why Forex? People begin trading the Forex market for a variety of reasons. You can trade from anywhere in the world. All you need is an internet connection and a laptop, computer, whatever. You can even trade off of your phone and be profitable. I was actually doing from my phone, like in the beginning, like first 3-6 months, I was doing just strictly phone. Most liquid market in the world, traders can profit whether a currency is increasing or decreasing in value. So you can buy or sell the market. Forex does not require a high initial investment, like I had mentioned. You can start as low as $50. Right here it says as little as 100. Some brokers allow $50, which I'll let you guys know which brokers I'll use. High liquidity allows large amounts of leverage. Some brokers allow leverage up to 1,000, which the leverage that I'm gonna recommend does allow that much. The goal of Forex is to buy a currency that is anticipated to gain value, or sell a currency that is anticipated to lose value. All right. Forex trading basics. So we're going to get into the whole resources. So the first thing that we're going to need, MT4. MT4, you're going to need to get that. I would recommend getting it on your phone. and on your computer. Now, if you see right here, we're able to get this on PC and Mac. Now, for Mac, it's a little bit more confusing because MT4 is made to be for PC, but it's still possible to download it on Mac. We're going to go through like the resources on how to download on both devices. So next, TradingView. This is where we're going to analyze the charts. Okay, so MetaTrader 4, that's where we place the trades. TradingView is where we analyze the charts. And then Forex Factory, this is where we get some of the news impacts that's happening in the Forex market. And then Forex Time Converter, this is a time zone. This is based off of what certain time you're in is when a certain session is happening. We'll get to the sessions and everything in a bit. So trading tools, we're actually going to go straight into the actual browser so you guys can see that. And by the way, there's going to be a break. The break is going to happen at 7:15 Pacific Standard. Okay, so that's in about 15 minutes. We're going to be having breaks. In each one of these days, we're going to be having like about a 15-minute break in between, so you guys aren't just strictly on your computer. You guys can go use the restroom, get a little snack, get fueled up, and then we'll be continuing. So let me go to the other screen here. Screen 6, here we go. All right. So I mentioned to you guys that there's going to be homework. I'm actually log in, show you guys like the back end, and then get into the whole MT4 stuff. Let's see. So once you guys get logged in, right now, all you guys are going to see is day one. We do have past 7-day training that we've done. So that's going to be uploaded at the end of the 7 days. So you guys can watch this 7-day and the last one. And any future ones that happens, it'll all be here. So for now, day one, make sure to go through this introduction. Inside of this introduction, there's a downloadable PDF file. It's going to be talking about price action. So price action abbreviation is PA. Just click on this right away, downloads. Make sure you go through it. All these PDFs that you get inside of the training, they're all meant and put there specifically so you can go through them and then go through the training as well. So it just better helps you out with everything. So this is going to be the price action thing. Yeah, there's a lot of stuff in here, but go through it. I've gone through this multiple times, and like all this is going to help you out. Most of the stuff we're going to be talking about is going to be Forex, but all these strategies do apply for like stocks, crypto. You can really get inside of any market, and that's kind of the whole point behind creating Market Masters Academy. I didn't call it Forex Market Masters. I called it Market Masters because you literally just learn these skills and you can master any market. Yeah. So make sure to go through that. I mentioned that there's going to be homework, which the homework, there's going to be a section right at the bottom that's going to be posted every single day. But at the bottom, when I assign homework, and I'll show you guys how to do the homework, but for the homework, you're going to have to, I'll show you guys later on, but pretty much get a link and then paste it inside of the homework, which is going to be like in the comment section. Right now in the getting started section, these are the resources that we're going to get through. So first one, MT4 for a computer. So you're going to want to download it. You can quickly download it here. If you go to tradersway.com, there's an area where you can download this one. If you literally click it, it'll just take you straight to the download. So it'll start downloading. I'm just going to cancel it. I already downloaded. Downloading it for Mac, xn.com. This is where it's going to take you. If you do have the Mac, just click here, download it. You're going to have MT4. For cell phone, you can click this if you're logged into the Market Masters Academy website. You just click here. If you have an Apple, it'll take you straight to the Apple Store, straight to that MetaTrader 4. You just download it right away. If you have an Android, which I'm on the Apple side with phones, but I'm on PC with regular computers. But if you're on Android, go to Google Play Store, click this, or you can just search up MetaTrader 4, whichever device you have. So create account with broker. So creating an account with broker, these are the recommended brokers. Traders Way is one of them, and then LMFX is the other. LMFX I mainly use for larger accounts. Anything from like 10,000 plus, I'll have accounts in there 50,000 plus that are inside of LMFX. They do have some cool things with like 100% bonus matches. We'll get into that whole thing later on. But pretty easy to create. You just click here. It'll take you here. It's free to open an account. Now, if you're just starting off, what I'd suggest is doing demo account. Don't go straight into live account. You want to practice the strategies. So right here, you can open an account, create an account in 30 seconds, just enter in this information, date of birth. With LMFX, I do think you have to be 21 and older to get into LMFX. You could do like a parent's account. I wouldn't suggest that. With trading, you do have to be 18 and older. There's some brokers that do allow if you're 18 and up to join in. I think Traders Way is one of them, where you can join in if you're 18. So you go through this whole process, and then you open up. Right here it says opening up a live account, but you can literally, if you just go LMFX, there's an area right here. It says open demo account. And then this is just pretty much trading with fake money. So you get a feel for how to do trading. So just open account, enter your information, and you're done. Next thing, step 3, connecting your broker to the MT4. So you need a broker. Think of the broker as like your bank account. You're going to be funding money into the brokerage account, but then the broker gets connected to MT4. So MT4, we have Traders Way. They have like its own server names. So if I go to MT4, let me actually open mine up right now. Okay, so I have it opened up on one of my other screens. Let me lower this down. Okay. So this is what it's going to look like. This is the MT4 platform on the computer. If you click on File and then Open an Account, this is where the servers is going to be at. Okay, so it says Open an Account. So if you have like a new broker that's not on here, like let's say you downloaded MT4 strictly from Traders Way, it's just going to show these brokers, but it's not going to show like LMFX. So you would have to click this plus sign, and then that's when you would search up like LMFX, and then like live server 1, and then that's, you click enter, and then it'll start searching for the broker, and then it'll add it on there. If it's blue, that means it's there. Okay, so if it was a live account, I just click here, or if it's a demo account, I click here. So let's say we were doing demo account, we click the demo, we click next, and then we would have already created the demo account on LMFX, so we would just existing trade account, and your broker is going to give you the information, the ID, the login ID. They're going to give that to you. Like mine over here, I have this one right here. This is my ID. You can see it's LMFX live server. Same thing with here. You're going to get like your ID. You're going to get the password that they'll give you. There's 2 different passwords that they give you. They give you the trader's password, and then they give you the investor's password. So with the trader's password, that's going to allow you to actively trade on your account. The investor password is like if you want to share the stats with someone else, and they'll be able to see your account, but they can't place trades. They're just looking at your account. So I'm gonna get into later on like how I'm gonna be viewing your guys' trades as included inside of the 7-day training is more like mentorship. So I'll be able to see what type of trades you're doing and kind of give you guys an idea of if it was a good trade, if it was a bad trade, and just kind of be there by your side through this. Okay. So you would be able to log in, get password, or put in the password, and then press finish. Once you press finish, on the right side over here, you should be seeing like this green and like some numbers right there. And if I put my mouse next to it, it says, it gives me a connection status. Okay. So if you see on the left side, we have the currency pairs. We have the currency pairs like USD CHF, GBP USD, Euro USD. These pairs are pretty much what we're going to be analyzing and seeing whether it's going to be dropping down, whether USD is getting strong, CHF is getting weaker. But I'm going to show you guys right now, like let's say Euro USD. To add this to your chart, you just click on it, drag it over to this area here. If I drag and drop, you can see Euro USD, 1 hour time frame. We'll get into the time frame and all that stuff pretty soon, but we have Euro USD, and if you can see this number right here on this right side, it's 1.13777. So us as traders, we're trying to predict whether the market's going to be dropping or if it's going to be going up. Like let's say over here, we predicted it was going to go up and it just went up like that, which is a good thing. We can either buy going up, sell going down. So this currency pair, Euro to USD, the way that that works is if I go to Google and I look up 1 Euro USD, right? So on Google, it says the exchange rate is 1.14, 1.14 United States dollar for every 1 euro. So pretty much what we're seeing here, it says 1.13, but as traders, we see it active. Google is a bit slower than what we can see it. So we see it by like the hourly time frame, like we can see it actively trading right now. So like for all of these, like 1 USD to 1 JPY. If I look that up right now, 1 USD, or not to 1 JPY, but to JPY. 107.36. If I go on here, USD JPY, it's 107.35. So pretty much like the same thing that shows right here. So we're going to be able to see the accurate currency, but this first currency is going to be the main currency against the JPY. Okay, so sometimes it's backwards. It's not always like USD in the front. Sometimes it might be like Euro USD. So now USD is in the back. So it's 1 Euro to USD, or 1 GBP to USD, 1 USD to CHF. Okay, so that's pretty much that part with the currency. The next part we're going to get into, let me actually change over the screen. Actually, I mentioned that we've used TradingView to analyze the chart. So if you click on this section inside of the course area, you can sign up here. I have the Pro Plus, if you can see, or is it the Pro? I think I have the Pro. I'm not sure which one. I thought it was a Pro Plus, but I have one of these. I think it's just a Pro, but you can join this one for free. They have like the basic version. I use a Pro feature because they allow like multiple indicators. We don't use too many indicators. Those that don't know what indicators is, we'll get into that in a bit. But I would suggest at least getting like the Pro, and then later on, as you advance as a trader, getting like Pro Plus, Premium. Premium isn't too necessary. Pro Plus is pretty much what I would suggest getting. Next, so these extra resources, Forex market hours. I click on here. Forex market hours. So we have the different Forex market hours. And by the way, the market's open 5 days a week. 24 hours. Okay, so not 7 days, 24/7. It's 5/24. So we have the Frankfurt, Germany, which is European session. Berlin, we have the London session. We have the New York session, Sydney session, and Tokyo. If you can see right now, the markets are live. We have Sydney, Australia. You can see on the right side, it's open. And then also the Asia is open. So what I would suggest, when you click on this, go here where it says time zone and go to your time zone. Go to every time zone you're in. I'm Pacific Standard, so I click on Pacific. And this refreshes every 5 minutes. You can change that if you want to, but it just lets you know when the session happens. Now, I'm normally trading during the New York and the London, and that's because that's the most volatile times to get inside of trading. That's when the market moves the most. USD being like the strongest currency, so that moves a lot during this time. And it'll let you know the time that it opens and then the time that it closes. So you'll know, like tonight at 12 o'clock for my time, midnight, that's when the London opens and it closes at 8 a.m. But the New York opens at 5, closes at 1 p.m. And then we have the Sydney session and then the Tokyo session. Once you have these settings saved, I would suggest clicking this bookmark area right here, which if you see my bookmarks right here, I have this one here. So if I click it, it's going to show me the same thing. Make sure the time zone is flipped, because once you change the time zone and then bookmark it, it's going to be that every single time you click on here. Give like a code right here that knows what time zone you're in. The other thing on the resources, which I also have bookmarked, is the Forex News Calendar. Forex News Calendar, on my bookmark, it's right here, the Forex Calendar. So if I click on that, here we're gonna have Forex Factory. And right here, this is how you look at the news. What type of impact is happening on certain currency pairs. So let me, okay. So on, like we can see right now, it's Sunday, June 23rd. It's showing at 8 p.m. At 8 p.m., there's gonna be some NZD impact happening. But if I put my mouse over this, it says low impact expected. So we know there's not really going to be like much movement, much volatility happening when NZD news hits. So we have yellow being low impact, orange being medium impact, and then red being high impact. Okay, so red is usually the folders that I'm looking at, red or orange, because there's more volatility happening on that currency pair. I'll show you guys like how to look at the currency pair and know exactly what to be looking for. That's going to be later on throughout the training. So right now it's just mainly going through the basics, get you guys getting the resources first. So something else that you're going to want to do inside of Forex Factory, on this right-hand side, we have this time right here. So this time has to match up with your current time down here. So pretty much that's the time right there. And that's because if you click on that, I have it set up as Pacific time, US and Canada, Pacific Standard Time. So DST, you can turn that on, time format AM, PM. And then you save setting. Once you save the setting, that's when you can go back to the calendar. It's gonna show the time match, and then you bookmark this so then you don't have to change that setting every single time. So then if you ever want to pull it up, it's going to show you your time zone. So if you're traveling like I was in the East Coast, when I went over there, I had to go here, change it, save as bookmark, and then I don't have to worry about it again. So wherever you're currently at, you just save that and then you should be good. Okay, so that's pretty much the resources. There's one more. This is second technical analysis. This I cover a little bit later. I think the link has changed. with time, but I'm gonna have to get this updated. Okay, I'm not sure how to remove that, but basically this is like a second opinion. It'll tell you like if the market's looking to be dropping on a certain currency pair, if it's a strong sell or a strong buy. So it's just like an extra opinion based off of like technicals. So I mentioned we're going to be taking a break. We're going to be taking a 15-minute break. We did this one a little later, but 7:15. We're going to be back at 7:30. So in about, what's that, 12 minutes, 12-minute break, you guys, and we'll be back. Okay. And then also you guys can leave any questions that you guys have on the chat area. Let me know any questions if you have any during the break, and then I'll review them once we get back.
All right, so I came back a bit early. Let's see.
Okay, here we go. So yeah, came back a couple minutes early, answered some questions before we get started. Let's see. All right, so someone asked, would you recommend switching to LMFX or Trader's Way? You currently have Hugo's Way. The Hugo's Way, they're pretty good. I've heard some bad things about them, but then usually brokers do kind of get bad things. There's always some people saying some stuff. So Hugo's Way, I've used them for like crypto trading or indexes and stuff like that, and they work pretty fine. You can switch over to LMFX and Trader's Way and see how you like them. My thing was like I've tried different brokers and saw which one is best for me. And so far, LMFX and Trader's Way are pretty good for me. Let's see. How do you know if news are good or bad for market? So we'll be covering over like the fundamentals later on, but that's a question that pretty much like we're going to predict if it's going to be going down or up based off of the news, but not just the news. It's like mainly technical analysis, but the news follows your technical. So we'll get into that later on. How do you make deposits and withdrawals through LMFX? If you go to LMFX, I know right now their withdrawals or deposits for wire transfer isn't allowing you to do that. You're kind of like on maintenance for that, but you can do deposits through wire transfer, crypto. They have credit cards. It really depends what you're watching this video and what they offer, but you just go there, go to LMFX, look at withdraw or deposits, and you would see. If you're doing large amounts, I would recommend doing wire transfer. If it's like smaller amounts, just regular credit card or even big amounts, you can do crypto with. But I don't really like using that due to the fact that it's not really tracked or regulated. So once crypto's gone, there's no way to get it back. Spread commissions and swap fees. Is there a broker with lesser impact from one to the other? LMFX spreads are a little bit bigger than Trader's Way, but the reason for that is because LMFX does have, they don't take any commission, so their commission is off of the spread. And for those that don't know what spread is, we'll get into that later on, but it's pretty much like the difference between the current price and it's like the bid and the ask for the currency pair. So that spread difference is like the number difference that they have. And that's how brokers make money. So they got to make money somehow. So they make it through either commission, spread, or both. Okay, so that's pretty much the questions that we got. Okay, so it's time now. We're about to get started. By the way, pretty soon I might be getting sponsored by Bang energy drink. They have some pretty good drinks. It's a good sponsorship for that drink. Drink a good amount. Someone said, do they work? Yes. I'm not sponsored by them right now, but yeah, they pretty much keep me up, keep me alive. Has like creatine in there, which is like a natural substance for your brain to like give you that energy or that mental focus. That's pretty good. Some people use like nootropics and stuff. You know, I see what other successful people do. My bodybuilder coach recommended these as like a good healthy supplement. They'll give me energy. Alrighty. Pretty sure a lot of you guys are going to be ordering some after this. Bang a day makes a profit stay. That's a good saying. All right, so let's go into the charts now. Someone said, "Are you looking to get buff bodybuilding?" I'm not looking to get like super crazy like competitor buff or anything. Just like lean out, muscle tone, healthy. Main thing is, you know, health, living a long, healthy life. So I know I'm being taught by a bodybuilder, but the main thing is more of a healthy lifestyle. Okay, so I'm gonna get into the next section here. We already covered over all the getting started sections. There's more things inside of MT4, you know, little tools here and there, blah, blah, blah. We don't really, we can get into that, but that's gonna take some time. So we're actually gonna go into more of the next part, which is the currencies. Let me flip this over to my next screen. And here we go. Okay, so going over the trading basics. So we already went through this. All right, so the different currencies, and I was kind of going through some of them like USD, but we have AUD. The country that comes from is Australia. That's the dollar, the Australian dollar. That's what AD stands for. The nickname for it is Aussie. You'll hear some people inside of the group chats call Aussie, or you'll hear Euro a lot. Like for some people, they'll say EUR. When you hear someone say EUR, they sound like a beginner. You know, if you hear Euro, that's when you start noticing more of like an advanced trader. Swissy being the CHF, that's from Switzerland, France. CAD being from Canada. Dollar, loonie. I don't really use that loonie, it just sounds weird. GBP, Great Britain pound. So Great Britain, the currency is a pound. Some people call it cable. I don't really use it, but just so you know. JPY, which is the Japan country, and the currency is a yen. The nickname also called the yen. NZD, that's the New Zealand dollar, and some people call it Kiwi. USD, United States dollar, buck. Okay. Some of you guys have heard of buck, but now you guys know that that's the nickname that people call dollar. So major currency pairs. All right, so the majors, if you actually go onto MT4, let's see if I can drag this over here. So on MT4, there's, when you go to, it's file, no, view, symbols. We go to view and symbols. This is where the currency pairs are at. So we have the Forex majors, which is pretty much the ones that we're going through right now. AED, Euro USD, GBP USD, USD CAD, USD CHF, USD JPY. These are considered the majors, and then we have the minors. Something to note on MT4 to add this onto your chart. If you double click and it's gold, which is my favorite color, which is good. Gold means it's active, which means you double click, it'll show on the left side. So like, let me go to the Forex minors because I have all these activated. But if I go to the Forex minors, you see this one's like gray. That's CHF PLN, the Polish zloty. I don't trade that. I don't know what the heck it is. You could still trade this with the strategy I'm gonna teach you, but I don't trade like weird exotic pairs. You just don't really know with those. So like Romanian Lei, there's so many different currency pairs, but if I did want to add it on there, like let's say GBP AUD, okay, that one's a good one to add on. So let's say GBP AUD, if I double click, it'll turn gold. And then if I close it out, it should be at the very bottom, GBP AUD. So now we have this on the chart. So now if I wanted to put it onto view it, I just click, drag, and then drop it here. Now it shows me GBP AUD and what's happening with that. Okay, so back to this. These are the different major currency pairs. Euro USD, which is European against the United States. People call it EU, okay? EU being short, USD JPY, short for that, UJ. GBP USD, GU. USD CHF, people do UCHF. UCAD. AED USD, AU. NZD USD, NU. So these are good to know because sometimes I like being quick and I say like UJ is looking to be a sell. So, or like UJ is looking to drop at major resistance. So then you would know what that means, USD, JPY. So these are good to go through. You see at the bottom, these pairs take up the largest share of the Forex market, accounting for about 85%, therefore having the highest market liquidity. All right, so the most pairs happen with these. I would say a big reason for that is because even when people put their MT4 chart, you would see the majors pop up and you're gonna have to add the minors onto here. So that kind of gets a lot of other traders to be trading the main pairs. So Forex terminology, we have going long or going short. So long means you are looking to buy the market. And then buy means, it's going in an uptrend. It's going to be moving up on the currency. So the base currency and selling the quoted currency. Going short means you are looking to sell the base currency and buy the quoted currency. So if you could see this right here, the first, like on Euro, this is a base and this is a quoted. So this is kind of the harder part to wrap your head around, but Euro and USD, because USD is the quoted one, if Euro is strong over the USD, it's going in an uptrend. If Euro is weak and USD is strong, it will go in a downtrend. Because Euro being that base one, and then we have the USD being the quote. Okay, let me bring up the chat area just in case, because I know some people might be chatting. Let's see. Okay. All right, so I see there's a problem with seeing my MT4 chart. We'll go through that in a bit anyways. We're gonna go through the whole MT4 area. But thanks for noting that. So bid and ask price. So this is where kind of that whole that whole spread happens. So bid price is the best price which you could sell the pair. Ask price is a price which you could buy the pair. So if you see right here, we have the bid and then we have the ask. So normally there's that difference, and that difference is what's called the spread. Okay, the spread is a difference between the bid and the ask price. So from this one, we have 1.4502 and then 1.4505. So that's 3. The spread on this would be 3 for both of these. Okay. Now here's the thing with selling and buying. When selling and buying, you're always going to start off a little negative. Okay, there's something called lot sizes, which when you place a lot size, it's just like if you do a 1 lot on this, you would be -3. If you place a sell, it's going to show like on this one and be a little bit more negative on that. So it'll be here, but it will actually show the 1.45. So you can see the spread, 0.003. This is a pips. So forex terminology of a pip, what is a pip? Percentage in point. That's what pip stands for. It's a unit of change in an exchange rate of a currency pair. Now 1 pip equals to 10 micropips. If you guys seen, I know some of you guys are inside of the signals. With the signals, I'll say like we caught 200 M pips, which is micropips, which these are points inside of the market. We'll get into like how to see the chart and all that, understanding the points and everything, but 1 pip equals 10 micropips. Some people call micropips as points because it's like right here when we see that euro to USD, 1.4502, 1.4505. So that's 3 points away. 3 points or 3 micropips away. All right. So you can see right here, Euro USD 1.1500, Euro to USD 1.11495. So the difference between this one and this one is -5 micropips. And we can see right here 1.11505. This is 5 micropips higher from this current one. So let's say if we were to place a buy, which this would be good because this currency is now higher than this. So if it was in a buy and market went up and the price is now at 1.11505, then we caught 5 micropips. If you place a buy and then it was giving you this, then it's going to be wrong. So let's go into this next section, which is actually going on to TradingView. Now I mentioned TradingView is part of the resources. This is where we analyze the charts. Let me go to 7-day FX Mastery. Okay. So with this here, this is how to look at charts, pretty much what's happening here. So the market is going from left to right always. Okay, it's going from left to right, and it's always going up and down, up and down, up and down. What we're trying to do as traders is we're trying to predict when it's going to be going up or when it's going to be going down. Now, with this bottom section right here, you see this entire bottom section is the time. And then this right section is going to be the price. So what we see in here is based off of the time and the price is what gets created here. So we're predicting if it's going to be going up based off of time and price. And you can see like on the right side, the price is showing at 1.13805. But then right below, it's showing us the date and time. So it's like the 23rd at a certain time. Now, what we have on this very right side over here going to be the time zone. So if you click on there, there's different time zones. Daily, 12-hour, 4-hour, 1 hour, has all these different time zones. And these time zones, what it's doing is with these candlesticks right here, it's pretty much, these candlesticks are telling us what's happening with the price being the right side, the time, and then we also need to figure out what time zone we're in to know when this is happening. So for candlesticks, there's different types of charts. Candlesticks being one of them. If you see on this left side next to the time frame, we have right here, candles. There's bar charts, there's halo candles, there's Renkos, there's Heikin-Ashi, there's line charts. Like there's so many different ways of looking at the price and time in different ways. The ones that we're going to be mainly focusing on is going to be bar chart. We also use a little bit of line chart. That's just like a little assistance. We'll get into that later on. But as of now, line chart's going to be, candles is going to be what we're going to be using. And the way that candlesticks works, I'm going to go back into the presentation and go over the candlesticks and how they work. So let me flip this over. All right. So if you guys see here, candlesticks, these are the most commonly used charts. They have a body and wick to them, which displays the high, low, open, and close within a given time frame. The creators of this, I forgot the name of the person, but some Japanese guy was a creator. And candlesticks. So there's 2 different ways, or 3 different ways: bullish, indecisive, and then bearish. So bullish meaning it's a green candlestick. Now you can change the colors and everything inside of the charts, but green candlestick meaning that it opens. Well, this is showing the indecisive one, but there's an open, there's a close, there's a high, and then there's a low. So if this opened here, that means, let's say this is like the 1 hour time frame. Every 1 hour, there's a new candlestick that gets created. So we have the open, and then throughout the hour, it's either going to be going up or down. So with this right here, this stick right here is what's called the wick. And it's going to be going through that right now. So for the bullish side, we have the open. This very top of the wick being the highest point that it was at. So it was like a big green candlestick, and then it dropped down, meaning the price was dropping. Since, remember on the time frame, we have the right side being the price. So it'll go up here and then it'll come down. At one point, if we see like a bottom wick, that means it was a red candlestick, but then it pushed back up. And then it closed here. Let's say it's the hourly candlestick, it closed here. And then we have the open here. So wherever it closed, the next hour, it'll open right there. So it closed here, open here. Now we have on this hour right here, we have a high. So at one point it was a green candlestick, but then it dropped down, creating that wick. And then it dropped down. It was a really strong red candlestick, and then it pulled back up, and then it closed here. So then after that, it would open up again right here, and then it's either going to be going up into a green candlestick or down into a red candlestick. So we'll get into candlesticks to sell and buy later on. That's going to be that, but let's go on to the screen. So the best way to show you on my screen is going to be, since the markets are live right now, If I go on to the 1 hour time frame, I mean the 1 minute time frame, that means every minute there's a new candlestick that forms. So I'm just going to zoom in here, and we can see like right here, price opened and it closed up here. And then right here, price opened here. It has a wick up top, meaning that's the highest point. And then it has a wick at the bottom, meaning that's the lowest point. So right now it's either going to be going up or going down. So we're going to wait for this minute to close. You can see like right now it's 7:52. So at 7:53, it's going to open a new one. So if you look here, it's still 7:52. As we see, the price went higher. Okay. Now it's 7:53. It created a new one. It opened here. So it closed here, opened here. Now it's either going to go up, turning green, or down, turning red. So for us, we're trying to either buy or sell this. And pretty much when we see green, you're more likely going to be winning if you just buy this, but there's more strategies behind that than just that. So based off a time frame, like if I go on to the 3 minute, that means every 3 minutes it'll show me one candlestick. So after 3 minutes, it'll show me another one, and then another one, and then just keep going. Same thing, 5 minutes, it would show me everything. So if you see, as I start zooming out, it's pretty much going to show me the same thing that's happening, but I'm just looking farther and farther. Just looking farther and farther. 30 minutes, 45, like you pretty much do the same thing, but now you're seeing like in a bigger perspective of what's happening overall. So 1 hour, 2 hours, I can do 4 hours. So it's pretty much that same exact thing. Daily. So it's showing us the same thing. We're just now zooming out more and more. So think of it like a scope. Like when we're on the weekly time frame, that means every single candlestick represents a week. So we're going to be zooming in daily, 4 hour. And part of my method is I'll go to the bigger time frame, and then I'll go closer and closer until I find a good entry to either buy or sell. Okay. So getting on to the next section, the market, if you can see, it's going down, it's going up, it's going down, it's going up, it's going down, it's going up. It's always going down and up every single time. So there's 3 different ways that the market can go. It's the wrong one. So we have uptrend, we have downtrend, and we have consolidation. Actually, this would be sideways. So the way that uptrend looks like, doing it in like a line format, it always comes up, it always comes down. But overall, what we see is that the market from left to right is going up. For downtrend, we would see this right here. From left to right, it's going down like that. And then sideways will look like this. And all you see in a sideways market is just going side like that. Even though if it does go down, does go up, like technically it is considered an uptrend if you look on a smaller time frame here, but overall we see it's going sideways. Now, these 3 different ways the market's going, it's going to be, they have its term. We have bullish, being in an uptrend, or some people call it a bull market. We have bearish, being in a downtrend, or people call it a bear market. And then sideways is called consolidation, which is trying to figure out where it's going to be going. Because for consolidation, it can break out and continue going in an uptrend, or break down going into a downtrend from the consolidation. So for bullish market, there's actually a reason why this term came out, the bull and the bear. Bull, if you guys know anything about bulls, they have these horns and they strike up when they attack. And the bear, what they do is they go up and then they tear down. So that's where they got these terms from. If you guys see in New York, they have like the bull, the famous bull out there. It's pretty cool thing. I was able to ride it when I was out there. But consolidation, there's nothing special, just that it's trying to decide where it's going to be going. So by knowing that in an uptrend, you're going to notice called HH and HL. So what HH stands for, HH stands for higher high, then HL stands for higher low. So in an uptrend, that's mainly what you're going to be seeing is going to be higher highs and higher lows. So what I like doing is just to make it easier for you guys, because I know this can be a little difficult for some people. What I like looking for is these V's, where you see like a V shape like this. There's a V here, there's a V here, there's a V here. These V's, that very tip is the bottom. Think of it like the floor, the bottom of the market. Okay, so I'm going to mark those areas off. We have this point, this point, this point, and that point there. So those being the very low areas. And when starting off, you're going to want to get your primary low. So everything starts off with an L being the low. And then these areas up here, which is a backwards V. If you could see, it's a backwards V. It has like a peak. Think of it like the peak of the mountain. That peak of the mountain is going to be the highs. So that's a high. This one's a high. That's a high. That's a high. So for an uptrend, what you notice is higher highs and then higher lows. So we have this low here, and then we have this high here. So it starts off as H. So we have that high, this low. Now, this low right here, which we identified, is a higher low. It's higher than this previous low. So now we're going to put HL right here. HL. And then this area right here, this low is higher than this previous low. So then we just put HL. Now make sure to get this down because this is going to be part of the assignment, is identifying higher highs, higher lows, and uptrend, downtrend, all that stuff. So this low right here, it's higher than the previous low. You can say it that way, it's higher than the previous low, and just mark off all the lows and start off higher low, higher low, higher low. And if you start noticing more higher lows, that just means it's going in an uptrend. So I marked off all my higher lows. Now I mentioned for an uptrend, we're going to be noticing higher highs as well. So we have a high right here. Now this high over here is higher than this previous high. So I'm going to put HH right there. And now this high over here, this peak of the mountain, is higher than this peak of this mountain. So we have a higher high here. This peak there is higher high. Now, if you could see this line over here, so we have higher low, higher high. Now, it's going to create a higher high no matter what, but it's not a higher high just yet until we see that rejection coming down like that. Once it has that peak of the mountain, a backwards V, that's when we know it's a higher high. So then what's most likely going to be happening after that higher high is a higher low. And that's why as a trader, just just this basic thing right here is going to help you out with trading, understanding higher highs and higher lows, because what we do as traders is we're either buying the market or we're going to sell the market. So if you notice higher highs and higher lows, you're going to want to buy on a higher low. Any of these higher lows are areas where you're going to want to buy. So most likely after the higher low, we're going to be expecting higher high, higher low. Now, normally after this happens, let's say this was to happen here. We have this area here that's a higher high. And then we have a V area right there. This V, which is higher than this previous low, so it's a higher low. This is higher than this previous low. Normally what happens after that is we sometimes get that consolidation happening. So if you see what I did here, what happens with consolidation is that it's not creating a higher high, it's not creating higher highs, it's not creating lower lows. It's just going sideways like that. We're waiting for that either higher high or dropping down below this low. So for sideways, let me move this down here. So for sideways market, we're going to be noticing H's and L's, highs and lows. So not higher highs and not higher lows. We're just going to notice lows and highs. So all of these areas right here. Well, this one is already a higher high because it's higher than this previous high, but this other point here is going to be the high. And then the other point on here, the peak of the mountain, is going to be another high. And as long as we keep having like those peak of the mountains being even, we're just going to keep getting highs, and it's just going to show us that it's in a sideways market. Same thing with the lows. This first low right here is going to be a higher low because it's higher than this previous low, since the market's moving from left to right. But then on the right, on this low right here, it's just a regular low because it's the same as the previous one before. So we have a low here, and then we have another low right there. Now for a downtrend, normally what you're going to be seeing is going to be this. So downtrend, what you see with this is lower low and LH and LL. So what LL stands for, I already said it, lower low. LH, it's a lower high. So with this right here, what we're seeing is the highs and these highs over here, but then the highs are now on the tops going down like this. The lows still stay these bottoms. So it's still these V looking ones for the lows. It's still the backwards V's for the highs. So this is a high right here. This is a high right here. And if it came up and back down, we have a high here, and then we have a high here, backwards V. And then the lows being, we have that low, we have this low here, this low there, and then that low there, showing us that V pattern. So, like I mentioned, for downtrend, you're gonna spot lower lows and lower highs. So let's focus on the lower lows. So this right here was a low when it was consolidating. that was a low area because before it's even, but then this low right here is lower than this previous low. You can see this one's higher up here, this one's lower, so I'm going to be doing lower low because it's lower than the previous low. And then we have this low right here is lower than this previous low. So we put LL. And then this low here is lower than the previous low. It's a lower low. Okay, so now we got the downs, the bottom of the market done for the downtrend. Now for the top, we're going to notice lower highs. So this high here and this high here. This high is lower than this previous high. So we're just going to do lower high. This high here is lower than this previous high, so we're going to do lower high. And this high here is lower than the previous high, so lower high. Just these basics right here is going to help you out with your trading style. Because what you're trying to do is you're trying to predict when it's going in an uptrend. So if you know it's already going in an uptrend, you're going to be buying the market. When you know it's consolidating, like when it's consolidating, you can buy off the low or you can sell off the high because it's consolidating. So you can sell here, take profit here. Buy here, take profit here because it's in a sideways market. When it's going in a downtrend, you know if it creates a lower low, lower high, lower low, market comes up, you know it's going to create a lower high. You already know it's going in a downtrend because you already see lower low, lower high. Once you see lower low, lower high, you know you're going to be selling on the lower high. And my thing that I'm looking for, I'm actually changed the color just for this part because this is important. So you want to buy, you guys probably saw like the recent post, buy the dips on an uptrend, sell the tops on a downtrend. So I'll write it down again. Buy the dips on uptrend, sell the tops on downtrend. Buy the dips on an uptrend, sell the tops on a downtrend. So this is an uptrend right here. The dips are these higher lows. So pretty much you're buying, I'm gonna write this here. Buy the HL on that uptrend. So you're buying the higher lows, but you're selling the lower highs on a downtrend. So sell lower highs on a downtrend. So that lower highs, these are the tops on a downtrend. These are the tops. This is the top. This is the top. So you're selling these areas right here, and your chances of winning already are much higher than if you're just guessing. If you're just placing a sell or buy randomly, and that's where getting back, like in the beginning, I mentioned that you're gambling. You're gambling if you don't know what you're doing. If you're just going in there, just placing sell or buy, and you don't like know if it's an uptrend or downtrend or anything, then you're more likely going to lose a trade. Compared to just knowing this basics is going to help you out. So that's pretty much that with sideways market. Let's see if there's any questions. Let's see if there's any questions. I know someone said buy the dips, sell the. Someone says buy the dips, sell the tips. That's another thing that kind of matches, rhymes. I like saying sell the tops, but okay. So let's go on to the next section. And as mentioned, all this is going to be recorded, so you guys will be able to see it. Okay, so someone asked, how do you know you're buying a tip or a dip? Okay, so the tips, or I mentioned the tops, like you're selling you're selling the tops on a downtrend. So let's just say like the price right here. You can see my mouse has a crosshair, which this crosshair on the right side shows me the price. See that gray area? That's the price. And then very down below, that's the time. So let's say right here, we already know, like let's say it was consolidating right here, and then it broke through, creating a lower low. So most likely after a lower low, it's gonna create a lower high. So once we see that lower high, this is gonna be the main area where we want to sell the market. We would not wanna buy the market here. Why would we buy if we're already seeing some signs of a downtrend being the lower low? If we see those signs of a downtrend, then we're gonna be looking for mainly sells. If we see signs of an uptrend, we're mainly gonna want to buy the bottom. If you see this stick that I have right here, this stick that I have here is much longer than this stick here. So yes, I can sell here, even if it's on an uptrend. Yeah, I can make some money, but you never know when that higher low would happen. And you make much more profit and much more probability of winning your trade if you're buying when you already know it's going in an uptrend. So these are the bottom, these bottom V's on an uptrend, higher lows, downtrend, lower highs. Hope that answered your question. Someone asked, what time frame is the main one you look at for trades? So we'll get into the whole time frames later on, but I'll go from like a scope. I'll look from far away, and then I'll get closer and closer and closer until I get my perfect entry. So going on to the next section, I'm about to erase this entire area. Actually, I'll keep it up here for a little bit. So you can spot higher lows, higher highs in any time frame. All right, like right now, I'm on the 4-hour time frame. If I see right here, let me just get like a random area. So this area right here. So we have this point here, this point here. So pretty much this area here, we have a low. We'll start off with the first low. And then I'm just actually gonna do it with my line. So this is pretty much what I see. Comes up like this, comes down like this, comes up, comes down, up, down, up, down, up, down, up, down. Okay, so I'm pretty much marking off what I'm seeing as far as lines. Now, not always is it gonna look as perfect as like how I drew it right here, like higher highs, higher lows. Like sometimes it'll look like this, which could look a little bit scrambled, but as long as we know that it's in an uptrend, creating higher highs and higher lows, and we're fine. So let me make these smaller so it just makes it easier to look at. Not that small. Okay, so we have a low here, and we'll start off with, let's just do this as a high. So we'll start off this one as a high. We do have we'll start this low, this high. Now this low on the right side right here, even though if it's a little bit lower, it's still kind of like an even low. Now this area right here, this is considered the high because it's that very tip. Remember the backwards V. So wherever you see that backwards V happening. So for this area right here, this would be considered a lower high. All right, now we have a high and then we have a lower high. So we kind of, in this area right here, pretty much what's happening, it's like in a way, not really consolidating, but it looks like it's about to do this. Like it's going to create a lower high, but we have a low right here, which means it's not creating lower lows, which doesn't mean it's in a downtrend. It's creating lower highs, which means there's more of a chance of it going down. But if after this we see, so it went up like that, this area right here, that's considered a HH because it's higher than this previous high right here. Let me actually zoom in so you can see this better. So this high is higher than this one over here. Now, this low right here, it's going to be a higher low because it's higher. This one's higher than this previous low over here. So we have higher low. So now we have higher high and higher low. So most likely after that, we could see this area right here. This would be a higher low. And then most likely after that, it's going to be creating a higher high. So then after we see this higher high, what we're expecting now is a higher low, which market came down and pretty much created that higher low right in this area here. Because this is the previous low. We have this low here. That's a higher low. Now, what we see right here with this high and this high over here is it's not really creating that higher high. It's just creating a high and a high. So we have a high here, which is not higher than this previous high. It's just a regular one. And then this high here. But what we see down here is this low right here is higher than this previous low. So it's a higher low. So the chances of it going in an uptrend are still stronger than it being in a downtrend when we spot higher lows. So same thing with this area here. It's a higher low. And then once it breaks this high, once we see that price go above here, and then once we see that backwards V, that's going to be that higher high. And then down here, most likely after that, it's going to create a higher low. All right, so this is going to be part of the homework assignment, is identifying uptrends. When you identify the uptrend, that means you're going to have to write down the higher highs and higher lows. Overall, from left to right, what we see with this is it's going in an uptrend. And inside of the homework, what I want you to do is putting bullish. Bullish meaning it's going in an uptrend. And by the way, I'm extending today a little bit longer because we did have like an introduction in the beginning. So we extended this a bit longer. So we have bullish, and then you're gonna write down consolidation areas. So like this area up top, it was consolidating. You see right here, it pretty much created a high here, and then a low right there. So that area right there, just gonna actually write it down like this, consolidation. And get familiar with the tools inside of TradingView, play around with it. Like with these tools that I'm using, I'm actually do this here as the bullish, just to make it look nicer. Bullish, and then for the downtrend, once it breaks through this low right here, like, well, I guess this area is considered, this area right here is considered a low. You can see it came down, kind of came up a bit. This is lower high. because this high area is lower than this previous high. Once it breaks through this low right here and creates a lower low, it's already showing you signs of a downtrend. So this low right here is lower than this previous low. So that's a lower low. And then this top of the mountain here is LH. It's lower than this high. So it's a lower high. This low right there, it's a lower low. This high right here, it's a lower high. And then now you pretty much know it's in a downtrend. When it's creating the lower high, most likely it's going to create a lower low. So that's when you sell the market. Now there's going to be more confirmations that we're going to get. We're going to talk about that in the future training for tomorrow. So there's also going to be, some like templates and stuff. One of my templates, I spent like about 5,000, got it from an institutional trader, which by the way, that's where most of my training came from, was institutional trading, which is actual traders that manage bigger funds. So that's pretty much like all the PDFs and everything that you're going to be going through was training that I had gone through when I had first started. So that's why I definitely suggest going through all of it. I did get like a partnership with those PDFs because I didn't, to create all those all that information, it takes time. Some of it's fully custom created by me. Some other I partnered with someone, got those. So this is pretty much going to be the homework assignment, creating lower lows, lower highs. And you can see once you spot lower lows and lower highs, it's already showing you signs of a downtrend. So as long as you're selling on a downtrend, your chances are already higher than not knowing this. Okay, so this being said, let's get one more area. So this, because we see it's going in a downtrend, this is going to be bearish. It's going to be bearish, and from left to right, we can see that it's going down. So I'm going to take a screenshot of this and show you guys how to create your homework, how to turn it in. So with this right here, with TradingView, I'm actually show you guys how to like zoom in and out. There's a mouse that I have. If you see on the webcam, there's like that middle section where if I go down, it'll like crumble it up, or when I go up, it'll like spread it out. So you'll get familiar with like how to use like going out or in. It's like another thing. I think it's like control, and then if you press side, it'll go to the left, and then if you press control and go to the right, it'll go to the right of the charts. But what I normally do to like center it is I click, drag across wherever I need it to go. The distance, just so we can see it clearly, I use the scrolling mouse to like kind of show it all centered. So this would pretty much be like the homework assignment here. You get your bullish consolidation, downtrend, spotting out higher highs, higher lows. For consolidations, it's like highs and lows, and then downtrend, lower lows, lower highs. Once you have those marked down, what you do next is you're going to want to click on this button, this camera right here on this right side. Once you click on that, or you click on Alt S, if you see there, Alt S, you click on that, and it takes a screenshot of this entire area here. There's a link right here. You can save the image. What's best, just so it makes it easier on all of us, you just copy. Once you copy, you're going to see if I paste it here, it shows me a screenshot of this. You can't move left, you can't move right. This is just a screenshot of what you took. So make sure that that screenshot is centered. Don't make it like really off like this. Like if you do it like this, and then you take a screenshot, and then you copy, paste, this is what we're going to see. We can't zoom in and look at your work. So you're going to want to center it out, make it look nice where we can view everything. It's going to be me and some other people are going to be viewing your homework. So we'll let you know if you're getting it wrong. If you're getting it wrong, we're going to kind of assist you. Probably one of the recommendations is like rewatching the video over and over until you get it down. But once you get it down, you're going to get the hang of it. It's going to be pretty simple. But this is the basic price action. Something that's going to help you out with that is going to be the PDF files, understanding like the higher highs and higher lows. There's going to be some more information in there, but definitely go through the PDF file for the first day, and that'll help you out. For tomorrow, we're going to cover over major market patterns, support and resistance. Let's see what else we have on the schedule. We're going to be covering over trapping the price. And just so you know, in the beginning of day 2, we're going to cover over the homework. So I can kind of show you guys where people are getting it wrong, where people are getting it right. Because once you see someone's work that they're doing it right, that's pretty much the kind of work that you want to copy. So those that are getting it wrong, at least you know that you're getting it wrong, than not knowing and you just do it wrong your entire life. And you really won't become successful at trading. So the whole point is getting everyone to at least 6 figures. I know you guys have seen my goal, which is getting 100 6-figure traders by the end of the year. So I know I have a couple of 6-figure traders, people hitting like $1,000 days. One of my biggest students, well, not biggest student, but most profitable that I've seen so far, in a single day made 24,000. So that was pretty impressive. Still hasn't passed me. I hit my 100K day not so long ago. So, I want you guys to at least be hitting like around that $500, $1,000 a day range. So let's get you guys there. I see you guys in the comment section saying, I want to be a 6-figure trader. Let's do it. You guys are in the right area, definitely with investing. That's the way to go. So day 2, be ready, and make sure post the homework inside of the homework section in the Market Masters Academy website. It's going to be released pretty soon, but it's going to show like number 3. It's going to be homework. So go through the homework, post it inside of the comment section. You'll see it at the bottom. There'll be some older ones from the past training. So I'll be watching only like the newer ones. Post it there and also post it on the Telegram group. Okay. Because the Telegram group is like right away feedback. Inside of the actual comment section, I don't go through them as fast as the Telegram. So make sure to post them there. That's it for day 1, you guys. Good job for sticking in. We'll be back at it again tomorrow. Yeah, see you guys then.